In this video, I'm going to answer the questions on everyone's minds for what to expect in housing this year, 2025. First, I'll share what other economists and so-called experts have predicted, a review of 2024, then why I've been right over the last 3 years, a time when we could see articles daily about an impending price crash, and other reasons behind why my analysis just is correct, while most others have been way off. Let's look at some current statistics. Here in Las Vegas, single-family homes had a median price of $480,000, up about almost 7% from last year, and just short of the all-time record $482,000. Condos and townhomes reached a record median price of $315,000, a 10% year-over-year increase. There were only 5,570 single-family homes available without offers at the end of 2024, and under 1,900 condos and townhomes listed without offers. These figures are about 30% less than in 2019. Overall sales for existing local homes, condos, and townhomes were 35% less than the average over the last 15 years. Nearly 80% of these properties sold within 60 days, reflecting strong buyer demand. Cash sales made up 25% of total transactions, down slightly from last year, but remain a key indicator of buyer confidence. The number of distressed sales remains near historically low levels. Las Vegas Realtors reported that short sales and foreclosures combined accounted for 0.9% of all existing local property sales in November 2024, compared to 2% 5 years ago, indicating a healthier market overall. Now, you'll see frightening headlines like this one. Home purchase demand destruction accelerates. Prices too high. Buyer's strike deepens. Sales of existing homes head for worst year since 1995. And yes, dig a little deeper and you'll see that the number of home sales today are about what they were in 1995 or during the global recession of 2008. Yet, our population has grown by 37%. Now, we'll review how this leads to home price increases. So demand has plunged in 2022 when mortgage rates soared, and plunged a lot further in 2023 as mortgage rates continue to rise to almost 8% by October 2023. But then as mortgage rates dropped starting in November and kept dropping in 2024, demand stayed at these collapsed levels through September. And now that mortgage rates have bounced off the September lows since the rate cut, demand has collapsed further. Fannie Mae economists, in their forecast for the remainder of 2024, said, "We expect affordability to remain the primary constraint on housing activity for the foreseeable future, and we now think full year 2024 will produce the fewest existing home sales since 1995. So, people will continue to stay in their homes. No need to sell." Housing Wire lead analyst Logan Mohtashami and Altos Research founder Mike Simonson have compiled a comprehensive forecast for the 2025 housing market. The pair project 4.2 million in existing home sales in 2025. This is a 5% increase over 2024, which is on pace for about 4 million transactions, a number that would represent the fewest home sales since the housing bubble burst in 2008. For comparison, annual home sales over the last 2 decades have averaged around 5.15 million, and sales topped out at 7 million in 2005. Housing Wire's analysts foresee home price appreciation of 3.5%. Housing Wire's 2025 forecast of 3.5% home price growth is at the higher end among the 13 examined, which averaged about 2.6% growth. Now, National Association of Realtors chief economist Lawrence Yun projects about a 2% rise in home prices in both 2025 and 2026. Fannie Mae expects its home price index to rise by 3%. Zillow forecasts 2.6% home value growth in 2025. The current median home price in the U.S. is about $359,000, having risen almost 3% in the year to October 2024, according to Zillow. Other estimates indicate higher price rises, with Goldman Sachs predicting in September that there will be a 4% increase on current values in 2025. FYI, 2 years ago, Goldman Sachs predicted a 2008 level housing crash. Fannie Mae has predicted a 3.6% boost. In the US, house prices have skyrocketed in recent years. In March 2020, the average home price was just $213,000, according to the St. Louis Federal Reserve Bank. Just over 2 years later, in June 2022, prices reached over $301,000, nearly $100,000 more. U.S. home prices will continue to tick up next year, according to Bank of America's forecast. Positive national home price growth for next year is expected largely due to light supply of homes, keeping prices elevated, said Gina Curro, head of MBS research at Bank of America. Although we note inventories of homes for sale are gradually building, which is contributing to the slower pace of appreciation, the tight inventory situation is largely attributed to high mortgage rates, which have left many existing homeowners locked in to sub 3% mortgages. With little incentive to sell, homeowners are contributing to constrained inventory levels that continue to put upward pressure on home prices. Altos research tells us to expect about 17% growth in inventory or homes for sale, which gets closer to the old levels pre-COVID of unsold inventory. One way to know that inventory nationally isn't on a path to grow faster than 17% is that there still aren't enough sellers to get there. Overall, for 2025, we are still forecasting slight growth for home sales, about 5% more home sales in 2025. Home prices climb about 5% each year, normally because our economy grows, our population grows, we tend to underbuild, and that's why it's so hard for home prices to outright fall even when sales are down so dramatically as they have been nearly 3 years now. They are currently expecting 3.5% home price gains for 2025. Some demand has shifted to new houses from existing houses whose sales have plunged because of the overall lack of inventory or options for buyers. And new construction home prices are stable with an average price over $100,000 more than in 2021. Over the past 4 decades, the median contract price, a 6-month average, of new houses exceeded the median price of existing houses nearly all the time. For most of that time, new houses were between 10 and 30% more expensive than existing houses. This changed in 2021 and then again this year, which is an unusual situation. However, you're going to see articles stating that America's housing market is hurting, which, look, it's just bullshit. However, there is near universal agreement on one major stumbling block: the lack of inventory. Prospective homeowners hoping that for that crisis to ease just got a gut punch with the release of a survey showing that half of American homeowners aged 56 and older plan to age in place. The results could radically change America's home buying pattern. For much of the last century, America's housing market moved to a predictable rhythm. Young homeowners buy starter homes and then move in to larger ones as their families grow before finally downsizing as seniors by selling their homes. This cycle and new construction created enough housing supply to keep the market moving. There is almost no way new home construction can compensate for the resulting inventory shortfall if half of homeowners over 56 in age stay in place. The cost of buying and developing land for new subdivisions has skyrocketed in the past several decades. Additionally, many cities and suburbs have adopted an anti-density and anti-development mindset that makes new construction an even greater challenge than in the past. That has squeezed inventory and driven home prices on a sharp upward curve in the last 15 years. The future implications for housing affordability are frightening to contemplate. The housing crisis could worsen if the average home buyer is 56 and half never move. This wasn't the 1950s and 60s when new developments were coming up outside America's major cities almost faster than people can move into them. That large-scale, sustained home building may never happen again in America. If you're of the view that home prices are going to crash in 2025 or even correct down, you just don't understand the signals that I've been sharing for the last 3 years. And you can go back and watch my videos from 2022, 2023, and 2024. I can state with confidence that home prices will increase 6 to 10% this year. And here are the 6 fundamental reasons. Number 1, interest rates. Homeowners are not going to sell their home with a mortgage rate of 3 to 4% rate to buy at 6 to 7% rate. More than half of all mortgages outstanding have an interest rate below 4%. Number 2, there are less foreclosures now than any time in the last 25 years, and record low delinquency rates. Neither the banks nor the government are going to let the Great Recession happen again. They've been working out forbearances for the last few years, letting homeowners modify their loans. And homeowners have unprecedented equity. Number 3, institutional investors have bought millions of homes across the country and estimated over 100,000 here in Las Vegas. Those homes are off the market forever. They're now rental-backed securities. They have been strategically buying portfolios and now jumped into the build-to-rent space with plans to develop rental homes nationwide. Real estate investment trusts such as Avalon Bay Communities have started building large master plan rental communities that replicate towny suburban neighborhoods. According to the Wall Street Journal, Avalon Bay purchased 126 build-to-rent townhomes, for example, in Texas for $49 million. The firm plans to invest over $1 billion in the build-to-rent sector. We think we're really in the early stages of what could be a pretty significant, almost new asset class, Avalon Bay Chief Investment Officer Matt Birnbaum told the Wall Street Journal. Avalon Bay is part of a growing group of investors that includes Blackstone, Invitation Homes, and Pretium Partners, who have realized that amid a housing crisis, renting is a far more affordable option for many would-be younger homeowners. The data backs them up. U.S. Census Bureau data shows that from 2021 to 2023, the share of build-to-rent housing starts doubled to 10% of overall single-family housing. In the third quarter of 2024, new renter households increased at 3 times the rate of homeowner households. With interest rates showing no marked decrease, investors and developers behind the build-to-rent communities feel they have an open floor with little competition. We're not competing with individuals trying to buy individual homes in the private market, Birnbaum said. In Las Vegas, investors have purchased approximately 131,710 homes since the start of 2000. According to data obtained by the Las Vegas Review-Journal, the Valley posted the biggest increase of investor home purchases in the nation in the third quarter compared to the same quarter last year at 27.6%. Redfin's economic research lead, Chen Zhao, said investors bought the most homes in the second quarter of 2022, about a little over 4,200. And investors are currently buying around 23% of all homes that are sold in the area, according to Redfin. Las Vegas is a particularly alluring city for investors because of its booming entertainment industry. We know from our agents that investors often buy and rent out multiple properties that immediately get filled by entertainment and service workers, she said. Las Vegas is also an Airbnb hotspot, so a lot of these home purchases turn into short-term rentals for vacationers or seasonal workers. A 2023 UNLV's lead Center for Real Estate study, which defined investors as any entity that bought 5 or more properties over the past decades, found investors could own at least 15% of the Las Vegas Valley's entire housing stock, and as much as 25% in North Las Vegas alone. It's a vanished inventory. Number 4, there have been less homes built in the 2010s than any decade since the 60s, while the population has increased, and even less housing starts in the 2020s since the pandemic. Some say that we are short over 5 million homes for number of family formations. Number 5, the cost to build is higher than ever, which is a function of materials and labor. Materials include concrete, steel, and lumber. costs are 38% higher than pre-pandemic. And look, there's no forest around Las Vegas, for example. We need lumber to come in. So there's additional costs of gas and transportation, and we all know that that's not coming down. Why and how can a developer build a house with a price of less than $500,000 to $600,000? They can't make a profit. So do you have any clue of the overall nightmare it is to try to build anything? Go try to build something and you'll find out. I'm going through it right now with my first development. It's a nightmare. Plus, development regulatory costs are also higher than ever. So these include zoning approval, compliance fees, labor requirements, delays, building code changes, and architectural design standards. And finally, number 6, homeowners are richer and in better financial shape than ever when it comes to the biggest asset for most people. Mortgage debt is the lowest in 25 years. 40% of U.S. homes don't have a mortgage at all. Households' equity in real estate is at a record high 73% of housing value. So there it is. I think it's crystal clear. And look, nothing is more expensive than a shitty real estate agent. For the truth in real estate, call me. I'm in the business day in and day out, year after year. Thank you for watching. If this content helps you, give it a thumbs up, and please leave any thoughts or questions in the comments below, and I will answer just as soon as I can. See you next time.